Good night, everybody. Welcome to another day 2, rather on my consistency series. We're gonna break down price action for the Sunday open of gold. We'll bring up the charts now. As you can see, I only took one trade for the matter. Sorry, it's a bit late, but have to come in and execute this video. So coming in on gold today, the market opened it was a very bearish, a very explosive open, considering over the weekend socio-economic events, geopolitical events, and as such, gold is definitely feeling the burden, the pressure of global tension. So coming in, we already had analyzed pre-market. We had a lot of sell side liquidity. We had equal lows resting below here. We had this 4 hour order block. But on the daily time frame, start off from there. The previous 3 candles was suggesting somewhat of a bearish move out of this daily fair value gap, which would have been right here. So we had 3 days in which we traded in this fair value gap with a lot of sell side, buy side liquidity taken and rejection down to the sell side area. We had 4 hour liquidity available on the chart. We also had 1 hour liquidity. Sorry for the yarning, just a bit late. So as we can see, market opened and created a very large gap, proceeded to sell down into this 4 hour order block. So once price was in this area of interest, I was proceeding to watch price on the 3 minute, but I fully understood that I needed more data to determine what price wanting to do. If you wanted to trade down lower to these sell side liquidity resting on the daily and 4 hour time frame, or if it was going to reach higher towards the gap. And as such, my trade idea came off a 30-minute CRT entry, which is highlighted right here. This liquidity sweep at 7 o'clock that triggered a change in the market direction. So let's go down further on the lower time frame to break down this chart, which will now drop down to the 3 minutes. So X would have represented the 30-minute low, which price proceeded to then run this low and invert two 3 minute fair value gaps, and also created a change in state of delivery right here after this explosive distribution move up out of this sell side area key level. So the draw on liquidity for this trade would be the opening gap, but also being very considerate, we also understood that 15-minute highs were in play. On the 5 minute also we had these highs. But again, the draw on liquidity for this session would have been this gap key level, which would have been, sorry, out of this 4 hour order block. And now it comes down to finding an entry. Entry was very simple, precise, consistent. As such, the model requires a liquidity sweep, an inversion, a change in the state of delivery, and then you take your execution. However, for my trade, I took it on the retest of this fair value gap right here. At exactly 4607. It should average about right here to just bring this over. and I took TP at 4681, which roughly looks like a 1 to 7. Ideally, I could have held this trade longer towards the draw and liquidity, which would have been at least the 50% to the gap, which would have made this trade a 1 to 2 if I had held. And then further to the consequent encroachment to 2.6. As we can see, price has traded back into the gap. Current time is 12:30, and price is still trading from the consequent encroachment of this gap, which I really don't anticipate or can project anything further for this session. I believe it's a wrap, but this is my trade review tonight. Go over one more thing, which was stop losses. So regardless of my entry being significantly above the change in state of delivery, consistent, something that remains consistent going forward is having stop losses at structure points. So it was below the liquidity sweep that occurred on the 30-minute X. And yeah, that was my standard risk for this trade and reward. Tune in again tomorrow. You can check out my live stream for the execution, live execution, live exit. Tune in tomorrow for day 3 of the consistency run towards becoming max allocated and max funded. Max allocation with prop firms and max pay. Tune in tomorrow. Right.